Welcome dear traders, happy Monday. It's time to continue our time-lapse videos. Today we look at pound yen, the beast, on a day chart. We started in May this year. Let's get started on the time-lapse. Some longies coming in, green bars, so therefore going down against the dumb money buyers. Boom. Again longies coming in, again the low is cleared. The moving averages has been cleared. And now we have shorties coming in. Shorties dominating. The squeeze line is pointing up. Here we know that the outlook is bullish, okay? The dumb money sellers are taking over, as you can clearly see. And see how you still have enough time to understand that. Shorties dominating below the price now. We have the dumb money sell position. So the price is going up as expected. The algos are going up against the dumb money sellers. Going for the stops of the shorties. The squeeze line is upward sloping. So we have an expanding squeeze against the dumb money sellers. And it doesn't matter that we're close to the high on a long-term chart. We know if more shorties come in, it's going to go north. Okay, we've seen it many times. And by the way, this is a great example to understand why you should never trade reversals without a stop or without the causality. Because what will happen, eventually you get caught in a squeeze on the wrong side, and then you're going to get squeezed out and your account gets blown. Especially if you don't use the stop. Look, long-term stops above the price, the pink lines, okay? Some shorties left the market, so collapse in the squeeze line. That's why the price is hovering around. But new shorties coming again the next day. Again, shorties coming in, a bit of longies, but they only lead to a little pullback. Shorties again coming in the next day. Okay, shorties increasing, shorties dominating. Upward sloping squeeze line. Long-term stops above the price. Short-term positions short below the price, which act as actual support. Again, shorties keep on selling. Now even more than before, so it's going upwards. The algos are quickly going up against the shorties. Shorties now very high on the scale. So we know that this is not going to be a reversal down. It's going to go up against the sellers. And the dumb money thinks I'm going to sell it cheaply into the market. And if it goes against me, I average down. The beginner's mistake, yeah? Because all that happens here is the squeeze against the dumb money shorties continues. And the algos will be ruthlessly going for the stops above the highs, okay? Some longies came in on one day, but that's only led to a little pullback. Again, shorties coming in, fueling the squeeze. Again, retest of the high, long-term stop above the high. The opposite of supply and demand. Yeah. Dumb money sellers lead to the market going up against them. Again, shorties entering. The algos wait for more money sellers, faking a little reversal down, so therefore attracting new shorties, luring them in. We are already in a squeeze against the shorties overall. Again, shorties dominating the next day. Look at the scale, more and more sellers coming in. So we know it's going to go up. You can buy expensively into the market. Even though the market is so high on the long-term chart, it doesn't matter. Those sellers will be served. Price going up against the sellers. Those shorties are on drawdown. Those shorties on drawdown. Again, sellers coming to the market, trying to average down, expanding squeeze against the sellers over days. Look how this unfolds over days. These are all the horrible weeks where dumb money sellers are caught in wrong reversal trades. Yeah, thinking they're gonna average down or what, and it's gonna turn. It's not gonna turn. Doesn't matter that the market is up already so high. It doesn't matter that it already went up so much. Boom. Long-term stop has been taken. Therefore, a little kink down in the squeeze curve. But here we go. A new short is coming in. And again, the algos are pushing the price up against the dumb money shorties. Next long-term stops, boom. Next long-term stop has been taken. And look, if you bought here and you hold it, you can just ride the squeeze, okay? Make loads of pips. Look at that. New short is coming. Algo's pushing up again. It doesn't matter how the chart looks like. They are going for the shorties. Look at that. We have a big squeeze against the shorties. More sellers came in the market. So more and more upticks in the day chart here. That is how Forex works, yeah? Let me move this a little bit. So this whole thing continues. Some long is coming in, so a little breather down, but overall there are still shorties below the price. The long is left, got kicked out with a down move, tight stops. And you see, yeah, as long, look, short is coming again. There we go. Again, the high gets tested. Next long-term stops get taken. Look at that. Upward tick in the squeeze curve. Look at that. Boom. High has been cleared. Again, short is coming in. Again, the high gets cleared. Some short is leaving now, or got kicked out, or got the margin call. This is a typical squeeze, okay? Hundreds of pips, thousands of pips in the end. Never trade reversals without a stop, no matter what somebody tells you. Eventually, if you don't have market causality, you will end up on the receiving end of a squeeze and you will get smashed and your account will get smashed, okay? And here you see why. Here you can see behind the curtain. You can understand why that is the case and how that works. Look, finally some longies are coming in, okay? A bit of a dumb money switch going on. So immediately the price halts its momentum. But those longies are not going to be enough unless more are coming in. No, shorties are again coming in. The longies are leaving, so they're going to clear the high. Shorties dominating. The next long-term stops above the price. Upward tick in the red squeeze line. Long-term stops above the price, waiting to be taken. Short is coming in once more. Again, the dumb money insists on selling into this market, thinking, come on, it went high up so much, it must come down now. What goes up must come down. Yeah, sure. See about that. A bit of a dumb money switch here. Some long is coming in finally. So therefore they just kissed the moving average. Long is leaving again. Some new long is coming in. Again, the price going down against them. Finally, some more short is leaving. Some more long is coming in. Therefore, down move now. Going down against the longies. Down money switch in progress. Going down against the longies. Short is left. Long is coming in. So more long is trying to buy, thinking they are buying the dip, so it's going to go after them. Long is getting out, not sticky there. Bit mixed money flow. The squeeze against the short is collapsed. So short is got kicked out and left. Some downward switch going on. Some long is trying to buy, but again short is coming in. Again short is coming in. You see some days just sideways movement. Long-term stops there. Some long is coming in. More long is coming in. But no uptick in the squeeze line of the longies. Low market bias here. Some more long is coming in. Long is coming. Long is coming. Long is coming. We're now in July of this year. Market empty. Short is coming in. Short is dominating. Dumb money sellers entering the market. Therefore, uptick in the price because algos detected that. Again, dumb money sellers coming in the market. Long is taking over. Long is coming in. So sideways consolidation. Long is and short is fighting. Who will be dominating in the end? We see it here first on the day chart and live. Price in the consolidation. Boom. Long is left. Short is in the market still. Long is trying to buy again. Long is leaving. Blurring mode of the algos. Some short is selling. Long is dominating. Some long is coming in. So price goes down. Down money buyers coming in. So the algos, boom, again down against the down money buyers. Going after them. Using some news. Short is coming in. Back up. They are going. Short is dominating. Growing on the scale. So up move against the down money sellers, uptick in the squeeze line of the shorties, moving towards the high to take out those stops of the down money shorties, clearing them out. Okay, typical house clean situation. You see first against the longies, then against the shorties. Short is still in the market, short is below the price. Squeeze line upward sloping, so it's bullish as we know. They need to clear those stops. Some short is dominating in the end. Some short is leaving. Long is coming in, but not enough. Price stuck between longies and shorties. Short is coming in again. Down money sellers. There are £4 yen going up again against the sellers. The sell positions below the price. Testing how sticky they are. Can they just take the short-term stops and will they leave, or can they put them into drawdown? Yeah. So here you see these other dynamics across all markets. I hope you liked it. If yes, leave me a nice comment. All the best.